How important do you think the supply dynamic actually is to long-end yields, Marilyn?
So in terms of long-end yields, as you mentioned from the quote, we do expect that, yields will gradually rise in the Treasury curve. We're already seeing a little bit over the past few days. But I think particularly going forward next year as well, we do think that the economy is going to continue to improve next year. We do think that GDP will increase. Obviously, we still have a lot of headwinds, and a lot will depend on the rollout of the vaccine, as we mentioned, fiscal stimulus and other measures. But we do think that next year we will gradually see rates back up, and we do think we'll see some form of steepening. We don't think it's going to be excessive. We don't think you're going to see some sort of sharp sell-off. But I think certainly for the back end of the curve, the Fed's also emphasized they do want to keep rates lower for longer, and they're going to keep a keen eye on that. But overall, I think they just want to make sure that they have this relative stability. And you may see the dollar depreciate a little bit, and you'll see rates increase a little bit in terms of yields.
Marilyn, I was going through your outlook for 2021. Apologies for interrupting at the end there. A lot of people will come on this show and they'll say up in risk, down in quality for the credit market. They look for a more constructive year in the year ahead.
Yeah.
You don't seem to share that view. You're a little bit more nuanced. Why?
So I think, first of all, it's very important to focus on duration. And when you look at, obviously, the government bond market, treasuries, or you look at the investment grade market, then we have seen duration increase very significantly. I think for us, it's important to have a balance. So we still want to have, hedges on there if you were to see some sort of risk off move. But conversely, also, we do think it's very important for investors to get the income that they need. So, we're focusing on certain areas of emerging markets. We do like high yield, and we do think that, you can get some decent income there. But it's important to also focus on the quality of those assets, on the volatility, and really understanding also the liquidity of those assets as well, because there is so much that is unknown, going into next year. And so for us, it's really important that you build a very robust and diverse portfolio. And so I think, for us, it's important that, as they focus on liquidity, volatility, and really looking at all of our assets from a very much a bottom-up perspective now.